Hey everyone, Charlie here. We're running a quick survey. We want to better understand who our listeners are. Do me a huge favor and fill out that survey. It takes under a minute, and the link is in the show description. This helps us make better content for you. Thanks a ton for listening. Link in the show notes. Bitcoin soars past its all-time highs to $122,000. Bitcoin is now bigger than Amazon. It's almost as big as Apple. It's 2.5 times bigger than Tesla. How high can Bitcoin go? This is a price episode of Bitcoin Season 2. If you don't like to talk about pricing, you can skip through this episode. But I know a lot of you want to hear me and Colin chat about price predictions, price modeling, and what is Bitcoin doing throughout the rest of 2025 and beyond. Stick tight. Let's get into it. Colin, we're back. The weekend was crazy. We hit $122,000. We're sitting at $117,000. Dang. It's been a ride.
Bulls on parade. It kind of felt like, we've had a few moments of this, obviously, in the current rally, but it really did kind of feel like the old days of like 2020, 21, 17, in terms of I was in bed on Sunday and saw Bitcoin, cresting a new all-time high. I went to sleep, woke up and saw it at 123. And you could actually watch the chart move up in real time. Reminds me of the election pump. But it's a reminder, act like you've been here before if you have. Everyone is getting very optimistic with their price targets. It's getting a little frothy. And Bitcoin loves to surprise both on the upside and the downside. So we'll be looking at some of the predictions from some of our favorite traders, or some of the analysis from some of our favorite traders and analysts, and contextualizing where Bitcoin is in the current cycle. And also, as you said, Charlie, in the intro, how it relates to some of the other assets that, people track regularly, like the Mag 7, and things like that.
Yeah, like if you remember, just in March and April, a lot of the analysts, when Bitcoin was pulling back all the way back to $75,000, I was seeing calls for $35K, for $20K. That's not happened. Bitcoin has soared, and now everyone's flipped bullish. I think they're right. But the question is like, okay, how high can Bitcoin go? I think everyone now pretty much agrees it can and will go higher. But I will just say, this is not financial advice. This is me and Colin riffing on like other people's statements and giving commentary on it. So I do want to show, as I said, at the top of this pod, at the top of the intro, like here is this great ranking where we can see where Bitcoin falls along in comparison to other notable assets. Up at the top, we have gold. But then we have major darlings of this past year, NVIDIA, Microsoft, Apple. And then over the past 24 hours, Bitcoin has lost its 5th place ranking to Amazon. For a brief day or two over the past weekend, Bitcoin flipped Amazon. It flipped Bezos. Bezos gave way to Bitcoin this past weekend as Bitcoin's market cap exceeded $2.4 trillion. So Bitcoin, it's been a while now since Bitcoin passed silver, Google, Saudi Aramco, Tesla, Walmart. You do love to see it like bigger than MasterCard and Visa, the other finger quotes payment networks. So like I expect this to be kind of a recurring news cycle, as every time Bitcoin flips the next bigger thing, we get another like flex or news event out of it. So next on our target is Apple. Just as a point of reference, gold is 22.3 trillion according to this chart, which means Bitcoin basically has to 10x from here to flip gold at the current pricing. Colin, you've seen over the years us flip different assets. What's going through your head?
What is going through my head? Whenever I see this chart, I think obviously Bitcoin has a lot of room to run. I think for most Bitcoiners, the gold market cap flipping is like the biggest milestone, right? to begin with, in terms of if we're looking at like long-term trajectory for Bitcoin. And sometimes I think these charts can be a little, or this comparison can, at least for me, be a little misleading or add some noise to how we value Bitcoin. Because I think that it's really easy to look at some of these stocks and kind of look at them and say, how is Bitcoin doing compared to some of these stocks in terms of just market cap? And then a lot of people are thinking about a company, a $1 trillion company like Apple, Amazon, Microsoft, Nvidia, etc., and thinking that, well, it doesn't make much sense for it to go above that, right? Like, why would this thing end up actually cresting some of the most popular and most profitable, valuable companies in the world? And that's where I think a lot of boomers or TradFi types fail to understand Bitcoin, and they look at it almost like a tech stock, and that's maybe going away. Like, people are starting to more look at it like a neutral bearer asset, like a digital gold. But the real interesting thing, though, is when you look at the market caps of some of the indices, like the S&P, the Dow, the NASDAQ, because I think the S&P is is like 50 trillion. This is off the top of my head. That could be completely wrong, but it's a crazy number. It kind of like boggles your mind. And this is obviously the Bitcoin will eat all finance narrative, right? Like, you'll see these block charts where it shows the number of, or the value of all of these different asset classes, from like real estate to equities to bond markets and all of these other things. And Bitcoin is still a very tiny nugget. Now, this is where you also have to get careful, though, because people are looking at these things and saying Bitcoin has a lot of room to run, but that doesn't necessarily mean that it's going to make up a lot of that ground in the current cycle. And I always come back to the fact that people are always incredibly over optimistic. I mean, we talked about this before we hopped on the horn. Last cycle was I think a letdown to a lot of people. A lot of people thought we were going to hit 800K. That we were going to hit 100K last cycle. I mean, people were bull posting for 300. People were going as far as to say that we were going to flip gold last cycle, that it was the super cycle thesis, right? Like, hyper Bitcoinization is upon us. And I think in a long enough time frame, I'm obviously very bullish on Bitcoin. I think we do end up hitting that gold market cap eventually, but that's a question of when. And it almost certainly won't happen this cycle. I mean, if it did happen this cycle, we're looking at a complete structural breakdown of the dollar system, which is, we've talked about this on the podcast before. That's a very scary thing and a bad thing for Americans, at least in that context, right? Who don't hold Bitcoin.
Yeah, a lot of people do not appreciate if Bitcoin flips gold really soon, then that is very, very bearish for a lot of things which underpin a lot of the American, but just global financial system. So this is the kind of thing, like, you almost get a little worried about how fast Bitcoin goes up at some point. But let's move on to the next thing. So I'm going to pull out a blast from the past. And this is, I think, one of my favorite charts. And this is what's called the Mayer multiple. We're showing BitBo here. And the Mayer multiple comes from notable OG Bitcoiner Trace Mayer. What is the Mayer multiple? It is a way to analyze the price of Bitcoin in a historical context. It doesn't say whether to buy, sell, or hold. But basically, the Mayer multiple is a multiple of the current Bitcoin price over the 200-day moving average. And we have as a rule of thumb that when the Mayer multiple is below 2.4, it's generally a good time to accumulate. Colin, where is the Mayer multiple right now?
Is that about 1.12?
Yeah, 1.1, 1.2. And what's crazy is, like, Bitcoin's sitting at $117,000, $120,000 right now. The Mayer multiple is nowhere near being overheated. And that's because of kind of the, even though it feels like Bitcoin has gone up quickly, it's not really gone up as quickly as it has in other bull markets. So, like, by one of the most long-standing, like, simple rules for Bitcoin acquire or not, like, Bitcoin is not overheated, has a lot of room to run this cycle. And this is a bullish chart if you have used this chart for the past decade, as I know many have, this is very optimistic. And the thing is, this chart doesn't immediately go over to the threshold of 2.4 if Bitcoin creeps up towards 150, 200,000. This is a chart of how relatively quickly Bitcoin's gone up. And so if Bitcoin creeps up slowly over the next year, this chart would remain under 2.4. I want to go to some actual analyst predictions. Because we're going to start like small and go up to the bullish ones.
We're going to start conservative and go more liberal with our price predictions here.
And we're going to start with one of the people I think who has had one of the best track records predicting the price of Bitcoin, in my estimation. And that is, a Bitcoin boomer named Peter L. Brandt. Peter's been in Bitcoin since I think 2016, 17, when he switched. He was a legendary commodities trader and still is. And he started noticing and trading the Bitcoin chart back in 2016, 17. And he kind of developed his own way of tracking, based upon kind of this parabolic advance perspective, and a cyclical parabolic advance, line that he would draw, where Bitcoin, you assume it's going to enter some kind of parabolic advance somewhere in the cycle. And once it violates that parabolic advance, then that's a sell signal. And through this, he's traded the past 17 to present unbelievably well, even identifying certain major fake outs, such as the summer of 2019 fake out. He also called around 50K of the last 2021 cycle as the top. And that was a pretty good call considering that he'd entered in around 3,000. So shout out to the boomers with strong mental models and price models which can be violated, which they stick to, such as Peter Brandt here.
For this tweet, if the entire price history of Bitcoin was a fruit, what fruit would you say it was? Dare we say a banana? Are we, as Raoul Paul says, entering the banana zone? That is Raoul Paul of Real Vision. It is Real Vision, right?
Yeah.
Not RuPaul of RuPaul's Drag Race, in case anyone was a little bit confused there. But what's interesting about this is, per the lines drawn on this chart, and as someone notes under the tweet, is there no number Bitcoin can reach that won't result in someone drawing a line indicating that it could be the top? It's also true. But I think Peter here is kind of making the point that we might be closer to the top than most people would like.
Yeah. And so I would interpret this as him saying that Bitcoin still has some room to run, but $150,000 would be a take money off the table level for him. And he's comparatively been conservative. He's usually quick to call the top before anybody else does. But he's also very quick to enter at the bottom. So he's already well in profit, as are many folks like him who have a more conservative trading approach to this asset. And you have to respect it because he's done it now 3 times, including avoiding many foot guns along the way of confusing price action. So Peter Brandt gets the first shout out in our list here. The next one I have is from an associate of Peter Brandt, Bob Lucas. Now, Bob also kind of OG, similar to Peter Brandt, and he takes I would say a vibes-based cycle approach where he kind of draws cycle tops and bottoms, and he's done pretty well for this for the past 5 or 6 years. And here he made a video pointing to anywhere from 150 to 175 as a base case scenario
that leads to the double cycle idea. But for now, just sticking with how prior cycles have behaved. And of course, if you haven't seen any of the prior videos, you'll know that it's not a huge body to go on. It's just 3 other prior cycles, but essentially you've got this 3 years up, 1 year down rhythm to the 4-year cycle.
So he provides this 4-year cycle model, and he says, 150, 175 is base case. If we're lucky, maybe we could see an extended, quote, 4-year cycle up to 200 something, 200, 250. Respect that. I like views that can be violated, and people who stick to that. Where are you on the 4-year cycle theory, Colin?
Oh, man, we were kind of talking about this before we hopped on. So part of the problem with anyone, I think, modeling out Bitcoin's price rises is there's always going to be something of a bias to the 4-year cycle, and specifically 2017 and 2020 and 2021's run up, right? So if you're looking at price predictions today, I think I'm biased towards being more conservative because 2020, 2021 was a fairly disappointing, rally and bull market compared to 2017. Now that's kind of funny to say when you consider that in 2018, one Bitcoin was trading for 3,000, then it went up to 60. I mean, that's a 20x. That's it literally in any other market. That's like you're retiring, or, you just made so much money that you have a guaranteed job as a trader or an investor with whatever firm you're working with, right? So it's kind of ridiculous to say, but in terms of what I feel about the 4-year cycle, every logical part of me says this shouldn't exist because that's not really how markets work as we understand them. There are 100 different forces or thousands of different forces and all of these innumerable inputs that you have to weigh when you're considering where an asset will go over a certain time frame. But it's really freaking weird that every single cycle seems to tick to this clock that started back in, really, I think you could argue 2013. I mean, 2011 obviously had an increase. A lot of that was driven by the Silk Road. But I think almost two things can be true at once here. The 4-year cycle holds up partly because each new round of bull markets has different catalysts. In 2011, you had the Silk Road. In 2013, you had integration into early exchanges like Mt. Gox. I think Mt. Gox was started in 2011, 2020, 2012. But there you kind of had this boom of exchanges coming online. Coinbase, I think, was established in 2013. And so you had more financial tooling than ever to buy and sell Bitcoin. 2017 had another kind of explosion with like the ICO boom. There were a new wave of exchanges and financial products coming out for Bitcoin. And then obviously 2020, 2021, you had the COVID stimulus and really a lot of capital and a lot of fiscal injections all around the world that helped fuel that. And then this cycle, ETF, Bitcoin institutionalization and stuff like that. So there's almost like if I was going to get mystical about it, or like delve into Bitcoin spiritualism, there's a weird symmetry between all of these different catalysts and the 4-year cycle. Just every time something else happens that sends Bitcoin higher. Now, you could take the other side of the argument and say, well, of course that happens because as the price starts to appreciate, because of the 4-year cycle thesis, because of the stock to flow stuff, it would stand to reason that you would have new money paying attention where they had previously dismissed it. So you have fresh blood coming into the market. So, I mean, overall, I think that it's hard to look at Bitcoin's history and not be biased towards thinking that the 4-year cycle holds some merit. Now, obviously, this does not preclude the fact that ultimately Bitcoin is like any other market. There are buyers and sellers. If there are more sellers, it's not going to do well. If there are more buyers, it's going to do well. But that's kind of my just general thinking of it. I try not to think too hard about it because I think ultimately
is why we respect you, and which is why we're talking about price, because of the other people, all they do is think about price. Whereas this is kind of an occasional unconventional thing for us to be like, okay, I guess we've been around the block a few times. Fine, let's talk about price.
Yeah. And for all those who are tuning into this, hoping to see like Checkmatey or Peter Brandt or another trader on here, I'm sorry to disappoint you. You've got me instead, armchair analyst. But I think that this is the bigger story here. And Peter notes this in some of his tweets. And this is not novel. This is literally the thesis. I actually saw someone tweeting the other day where it's like, Bitcoin bros, like your Bitcoin is only getting more valuable because the dollar is going down. And it's like, yeah, dude, that's the entire thing.
The entire
and I think
thesis, bro.
I think ultimately that is going back to the 4-year cycle. If there's market psychology around it, people are going to trade it that way, which helps. But ultimately, the larger story here is just the devaluing of the dollar and fiat currencies, right? So if on a long enough time frame you expect the dollar to go down, then yeah, you're going to expect Bitcoin and other hard assets to go up because they are programmed to be scarce and also quantifiable in terms of the issuance schedule, right? It's like very mathematically certain. And that was one of the things Peter noted on his tweets and some of these calls that he's making, is that ultimately all of this goes out the window if the dollar continues to decline. And the DXY, the DXY index, saw something recently. So far in 2025, it's down like 10.7%, which is, I think, one of the worst starts for the dollar since the 80s. Please fact check me on this.
I'm actually going to pull it up right now.
This is coming from memory. But I mean, that really is the thesis, right? And I think what we're seeing a lot of jitters in the bond market. I write about this every now and then. And at the end of the day, if you look at what's happening in the bond market, bond traders are completely uncertain of where yields are going to go. They keep whipsawing. They plummet on certain positive news from trade negotiations. They've surged recently again. So yields are going up as when I say surge, I mean the yield specifically. Yields going up means the bonds themselves are actually being devalued because the older notes are no longer as valuable because they're at lower yields. And at the same time, you have the dollar depreciating. There are so many jitters in the economy that a lot of people are currently subscribing to this melt up thesis that what we're going to get ultimately from the Trump administration is not fiscal austerity. That was honestly never really on the docket. Yeah. I don't think for anyone who
it was never really going to happen.
I mean, if you listen, not to verge into politics too much, but if you listen to the Trump campaign, like they were talking about tariffs the entire time. JD Vance is like kind of like the Republican version of an FDR socialist or an FDR New Dealer. I don't really want to say socialist, but like he believes in channeling state resources and state organization into stimulus for American industries, right? And reshoring American manufacturing through things like tariffs and other protectionist trade measures. All of that stuff ultimately is inflationary. And if you look at the big, beautiful bill, there's a reason Thomas Massey and Rand Paul and these other fiscal conservatives in Congress voted against it and were vehemently opposed and very vocal about it. Because on the one hand, you have them kind of parading these Doge cuts, which ended up being like 150 billion, which is peanuts in the grand scheme of things.
The target was like 2 trillion, right?
Yeah. And then you get the big, beautiful bill and surprise, it's more of the same. The government deficit is projected to go up over the next, 2, 3, 4 years. And debt is going to go up as well. This is the Lynn Alden thesis. Nothing stops this train. Ultimately, nothing is going to stop the fiscal and monetary stimulus. And the other big thing here that I think kind of like forecasting into the future, this cycle has been pretty good. I think the next cycle could potentially be even crazier because that's when you have a lot of boomers really entering the retirement age. And all of those entitlements are going to be kept because politicians are not going to cut those. When one of the largest segments of the population is reaching retirement age, it'll be wildly unpopular. And I think that is when we will probably see like 4 or 5 years from now, around that time and a little bit further out, you're going to see so much fiscal stimulus because they just have to prop up these entitlement programs that I think that's when you could potentially see whatever a super cycle is, where like Bitcoin basically just inches up without the dramatic drawdowns that we've seen in the past. I would not be surprised if we were having this conversation 4 or 5 years from now, we would see something like that.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
So I like that you brought up boomers and you brought up the supercycle, because we're going to go straight to Bitcoin Twitter and go to Udi Wertheimer, and we're going to rag on him a bit because he is here predicting $400,000 by the end of the year. Shout out Udi. We love the bullishness, but this seems, even to me, a little bit too crazy. Or is it? Because I think there is an unexpected angle to this. If you spend all your time on Bitcoin crypto Twitter, you may be missing that the narrative is boomers buying Bitcoin, institutional flow. That is what is driving Bitcoin. That still, to me, feels crazy. $400,000 by the end of the year. I mean, I don't know what he's thinking. He was predicting OpCat last cycle and it didn't happen, although soft fork discussion is moving forwards. But $400,000, I've seen Bitcoin go up, and that still feels surreal. But then again, it's just a 3x from here.
Yeah, I mean, I think this is total engagement bait, but to your point, 150 to, or any range that you have for a top for this cycle, whether it's now at 123 or it's 400, going back to the dollar depreciation thesis, anything is on the table if people continue to lose trust in the dollar and continue to lose trust in U.S. treasuries. I mean, these are the financial assets that underpin global markets around the world. And so if your thesis is that is going to continue happening at an aggressive clip for the next year or two, like 400K is not out of the realm of possibilities. I would agree with you. It's like on the less likely crazy end for me, where it's like, wow, things are getting really screwy in the currency markets, right? But it could happen. It's less likely, I think. But you were making a really good point about one of the things that could fuel this before we started that I think merits mentioning.
Yeah, and this is again Udi, the 400K guy who we just mentioned, has floated this among other people, which is here's a tweet screenshotting the iShares Bitcoin Trust ETF. That's BlackRock's Bitcoin ETF, IBIT, which we refer to it as. And this tweet says, Udi Wertheimer made a great point. Boomers aren't looking at BTC price. They're looking at IBIT. And that is $60 LOL. I mean, so much of the Bitcoin narrative has been challenged because people have unit bias. People see $100,000 Bitcoin. They're like, I could never buy that. That seems way too high. But boomers who are looking at their retirement accounts are like, oh, I'll buy a few hundred shares of IBIT. That's $6,700. That's a reasonable allocation. Like, that is entirely feasible. There's been a lot of the Bitcoiner discussion around maybe we joke about a stock split or redefining the units of Bitcoin from Satoshis to calling a Satoshi a Bitcoin, making it easier and more approachable for the average person, perhaps, to own, Bitcoin and not be as intimidated by the unit price of it. But here we are. This, to me, seems like the most obvious evolution in unit bias, and probably the thing which is going to mitigate a lot of that, which is boomers looking at their how many shares of IBIT they can buy, and $67 doesn't sound that bad, especially if we're talking about this being a volatile asset. And IBIT launched at, I believe, $30 per share. So, this all of a sudden, could feasibly, I mean, it doesn't sound crazy given the stock market for IBIT to run to 200 or 300, in which case that is comparable to several $100,000 Bitcoin. All of a sudden, Udi's prediction of 400K does not sound that crazy if you consider the boomer on the other side of the trade.
Yeah, I think it's an interesting point when you're just generally thinking about unit bias. I do think that plenty of boomers will look at, if they put it in for 67 at 67 and it goes up to 100, they're probably going to take some profit, right? They're trying to prepare for their retirement. They would rather have cash. Most of them still have trust in the legacy system. But it is compelling to me, the idea that if you're looking at some of these ETFs, and you could literally sub any of them, right? Like Fidelity's is floating around $100 right now, the FBTC ETF. I don't know what the other ones are, like GBTC or VanEck and some of the others. But at the end of the day, these are much lower denominations, right? Because of the way that the ETFs are structured. And it stands to reason to me that that could lead to more aggressive inflows on that institutional and paper Bitcoin front, right? Because you don't have people looking at the Bitcoin price. And I think it's compelling, especially when we look at the fact that TradFi has really been driving a lot of this current cycle. And, people say retail isn't here yet. And maybe we do see a surge in retail interests. I think that's possible over the next 6 months. But retail is also just here in different vehicles, right? Like they're buying ETFs. I know even some of my relatives and friends who already have Bitcoin allocations, like they're rolling their IRA into the ETFs, right? They're taking their 401ks, converting it and putting a portion into the ETFs. So they're just channeling it through different mediums. But I do have to say though, and I've seen this anecdotally from a lot of people, and I feel it too. Despite the all-time high, the phones are not ringing off the hook. I'm not getting texts from people I haven't spoken to in years asking who know that I'm involved in this. And part of me wonders if there's just general fatigue around Bitcoin's price movements for those populations, or maybe they're just so like coping and seething that they don't want to reach out about it because, everyone has that annoying Bitcoin friend at this point who's been screaming about the price for years that they need to buy at these levels. But I also wonder if part of it is from the mainstream media standpoint. I don't think there's been as much coverage of the pump for a number of reasons. One, I think the biggest one, honestly, to get back into politics, I think there is kind of this mental block, or reporters are loath to report on this thing, considering Trump has been pretty big and favorable to Bitcoin and crypto and has all of his weird, sometimes stupid ventures in the space. But I think also part of it, if I'm like getting tinfoily, because I don't think that's too tinfoil. I think like anything associated with Trump is just like you don't want to paint it in any positive light for a certain class of people in the U.S. and the media has traditionally been one of those. But part of it also, I wonder, I can't help but think like you really don't want to admit that Bitcoin's winning, and you also don't want to give credence to this thing that in some ways threatens, the traditional financial system or the way that we use, manage, and envision money, right? So there's kind of this like we won't do that. And then the third explanation is just that fatigue thing, right? Like how many times does an outlet every 3 or 4 years really want to be posting stories about how Bitcoin has hit another all-time high? And just to kind of take a victory lap for all of Bitcoiners listening to this, it's just a huge I told you so moment, right? Like we've listened to nothing but criticism since Bitcoin's launch, honestly, and especially from 2017 on, about how this is a bubble, this is stupid, this is not going to work. And then suddenly, like the largest asset manager in the world launches an ETF for it. Suddenly it is becoming something that is entering the national conversation. And I think a lot of people just don't want to eat crow. They don't want to talk about it because like, why would you? Especially for some of these reporters who have been crapping on it for a decade, maybe plus. And it's like, you could have just bought some and then you could be a little less salty.
Not been a reporter for the past
Or you join one of the wonderful Bitcoin and crypto outlets and you don't have to worry about a conflict of interest.
One of the few reputable Bitcoin media outlets, such as Blockspace Media. I mean, the thing is like, you've got multiple things. I think you can't discount the fact that like the AI narrative has basically been the meta narrative. So anytime people like think about tech and wealth creation in tech and things which change the world, AI is the top of the conversation. NVIDIA sucks all the air out of the room. That kind of thing. So like people are the people are going to talk and think about that. That news is going to be in media. And then I would also bring up like, do you think the average person in America, especially the average like mainstream media listener, do you think that they actually like regularly realize that we're hitting all-time highs in the S&P and markets? Because I don't like follow mainstream media that much, but I think the fact that markets have just been ripping, even though they're volatile, is not really understood by the average person. A lot of people will be like, oh, wait, weren't we just like dooming because of tariffs? Weren't we just like about to crash because of like the Iran nuke thing? And yet here we are, everything's at all-time high. All of your bags are ripping. And I don't think that this is really just the vibe across, I would say, the mainstream media of America has not really been like that. Maybe it's reluctance to admit it, or maybe it's just it is probably just fatigue, volatility. So with all that, Bitcoin has not really played as much of a role. And, it means that perhaps retail and mania is further off or more mitigated than we might anticipate.
And one thing to build on what you just said too, and Bitcoin's a part of this seismic shift, but it's a very small piece of it in most people's minds. We're at this crazy juncture in global politics and the global world order. The US rolling out tariffs against key trading partners is not something that has really been executed on a scale like this for decades. You have Trump winning a second term after nearly being killed on live television after losing in 2020. And you have people recovering from the COVID shock. You have people saying AI is going to replace jobs and make us all poor in 10 years. You have all of these forces that are completely rewiring how we view the world. And, this is like the fourth turning thing too, right? The fourth turning thesis. Like we are at a point where we are about to make a leap forward into a completely new era. And so there are all these other super interesting news items that are going on that really dwarf this, this cryptocurrency that has typically been the domain of cranks and crypto anarchists and libertarians, right? Where it's just not as interesting as the fact that Trump is trying to completely rewrite or completely redo the landscape of global trade. You have a lot of unrest over, domestic policies regarding immigration and deportations. You have all of these things happening, and it's just simply not as interesting to people. They don't see how it impacts their life, right?
Yeah. So I had earmarked perhaps talking about gold and silver with this pod, but I think I want to leave it at that. I think you and I are due for a what I call like the boomer coin, the boomer metal podcast here, a boomer metal rip sometime, but we will do that soon. Otherwise, if you're listening to this and you have a favorite analyst that you think should be on Bitcoin Season 2, tag them, post about it on Twitter or LinkedIn, and get them to reach out to me. And I will take a look. I'll see if they pass the vibe check, because it's a bull market. It's time for me to hear the best analysts and bull predictions or bear predictions that you've got. So if you have a favorite person you think that we should talk to or take a look at, hit us up and tag them in our mentions. Otherwise, thank you so much for listening to Bitcoin Season 2. I'm at CB Spears.
I'm at As I Lay Hodling, and we hope you all have a beautiful week and a good weekend if you're listening to this later in the week.
Hey everyone, Charlie here. We're running a quick survey. We want to better understand who our listeners are. Do me a huge favor and fill out that survey. It takes under a minute, and the link is in the show description. This helps us make better content for you. Thanks a ton for listening. Link in the show notes.